Good afternoon, and it's thanks IMARC for the opportunity to talk. And, this is not about me though. This is about Bounty Mining. I've got a fairly brief time slot, but certainly more than happy. Our booth is immediately out the door here on the left. Bounty was at one stage a junior contract miner, specialising in underground board and pillar mining, a bit more mobile, multiple machines, rather than the large-scale longwalls, which were all. We started a bit of a raising process last year with a very small long-term Wongai project up past Cairns, which is a spectacular, very high-quality premium coking coal, but it was always a long-term game. But at the time that we started that process, the Cook Colliery, which is up near Gladstone, existing mine, been operating for 20 years, had about 7 years ago, was acquired by the Guangdong province, Guangdong Rising, who purchased the asset for $450 million back then in 2010, which was the boom of the market, the coal market, and then put another $850 million into a major upgrade and fully upgraded the whole mine and the process plant from 0.7 million tonnes to 3.5, and put in a full coking coal recovery circuit. And then during the downturn over the last 2013, 14 and 15, got into financial difficulties, got caught up with the Wiggins Island massive take-or-pay obligations, and in April last year went into an administration event. So we saw a real opportunity. We were fortunate enough to be the winning bidder, because there was literally an administration liquidation sale. So we actually acquired this asset for $30 million. So there's more than $1.3 billion has been spent on a fully operational and operating mine. And just due to that lag effect, and they managed to hang on for as long as they can through the downturn, we picked up a great opportunity. So we're a small company. We've got this great, fantastic opportunity. We specialise in board and pillar. That was the mining style they should have had. They introduced a big longwall, got into difficulties with that. We will probably even sell most of the longwall and get it out of the mine. But Cook has been around for 20 years. Again, everybody talks about it. So, I used to build, it was a tough mine, but as I said, forget that. It's nothing like that. It's had all this money spent on it, and it's a fantastic opportunity. So everything is existing. We took the mine over on the 8th of December. On the 24th of January, we started mining. We had 14 people. We've now got 250 people, and we've got 4 mining units currently now operating, and we're pushing to try and, by the end of this year, to get to a 1 million tonne per annum run of mine rate. So we're selling this coal as hard coking coal. We've got 3 other assets, greenfield assets, that actually surround the existing very large infrastructure, all coking coal. So we're a unique animal in terms of the Australian Stock Exchange, that we basically predominantly have majority product as a hard coking coal, and we have a little bit of a byproduct, high quality thermal coal. So all our peers have PCI or semi-soft, or like Whitehaven coal, thermal coal. Our nearest peer, we are selling coal at more than $30 US a tonne higher because of its coking coal, and I'll move on to that a bit later. So we've now got 3 development units underground, plus a high production sumping unit. So the development unit goes and puts the tunnels in with bolting rigs. It cuts metre bolts, and allows us to have very stable position, maybe 6-7 tunnels, big pillars. It will pull out of that area, maybe it's 700 metres long, and start to develop a new area. And then we have a machine that has no bolting rigs. All it does is just punches into the side of these big pillars, and we've got a 4.3 metre coal seam. The first machine will only cut 3 metres. We can even take the floor, and we're taking these sumps out of the pillars. All it does is cut coal. So out of these 4 machines, it's quite a good unit. It's one's developing forward is the one that comes out and extracts out with the high productivity coal. We've got a fully existing rail loop, 18 kilometres, which we've now had it fully upgraded to take the full 8,000 tonne train capacity, electric trains as well. We've got offtake agreements with some major US and Chinese steel trading companies. So we've got more than 50% of our product is sold through to December next year. Coal prices in Australia have been spiralling up and Aussie dollars going down, so a perfect storm for the right reasons. But we've just been in an early ramp-up phase. We're starting to see some real tonnes come out. We've had some delays, mostly frustratingly around getting small equipment, electric trucks and some cutting machines. But our last lot of trucks, which were 8 weeks late, are now at the mine, or actually one last week and one this week. So we've actually had a stepwise increase in production from 30,000 tonnes last month. We should do at least 60,000 tonnes this month, and that should start to build towards 90,000 tonnes in the new year. That should move us very quickly into a cash flow positive position. We've got that much spare capacity. One of our neighbours, we've actually now got a toll washing agreement to wash 1 million tonnes a year for the next 2 years until we can develop some of these other longer term projects. That in itself will probably generate $6 or $7 a tonne of just free cash flow for us while we're using the excess spare capacity in the plant. So we've had an IPO in June, raised $18 million. We had a bit of a delay with equipment. It was a bit of a problem for our cash flow. We just had a $10 million raise at 30 cents. So we're now just in a position to really move forward. So only 385 million shares. Our market cap at the moment is probably a bit less than that. It's been a pretty tough market, week on the stock markets. We're down a little bit less than 25 cents at the moment. We've got quite a good spread of shareholders. We don't have any dominant position. One of the trading companies is 16%. The other Chinese one is at 11. I'm just under 8, sort of 9, and then we've actually got a lot of free float, which is quite good. So in terms of the coal price, it's the best kept secret in Australia. Interestingly, Coronado Coal and there's Whitehaven Coal, a number of the coal producers are not actually, there's no recognition of what's actually happening in the market. So since July this year, our coal price dropped as low as, there's a premium price. We are in this second tier. It's still hard coking coal. And this indicator is called Platts HCC 64. In US dollars, it fell to just under $106 in July, and it's now risen to 193. At that time, the FX rates were 74 cents, and they're now 71. So converted to Aussie dollars, that index has jumped substantially, shall I say, more than $50 Australian in less than 9 weeks. So that's helping. So I won't run through all of these in detail, but we have quite a broad and experienced board. We've got some massive greenfields projects, all within 10 kilometres of the process plant. So we are at the Cook mine, or Cook Colliery, and there's on the same tenement is immediately to the north, only 2 kilometres, with probably a potential 25 million tonne open cut. We've just completed a concept for that. There'll be a very big underground expansion into a completely new area already on the same mining lease, and it's closer to the process plant than where we're currently operating. 56 million JORC tonnes, and then there's a further project, the other side of the wash plant, that is over 200 million. So we've got enormous resource opportunity, and we basically have all of the infrastructure in place. So that's just a summary of it. More than 700 million tonnes of JORC. And just get this current operating mine within the next 4 to 5 weeks in a cash flow positive position. I can then breathe, and then we can start working on these future projects. So where we are is just inland from Gladstone. Said this mine's 20 years old. There's existing rail loops. There's existing rail all the way to the main port at Gladstone. We're not a big producer. We've been able to get access into the old port at really low rates. We've got good operating contracts with Horizon, and so all the infrastructure in this area is all in place, and it's just south of the township of Blackwater. All infrastructure, I said, the process plant itself is more than 3.5 million. We won't run the current mine more than maybe 1.5, maybe a bit more million tonnes, probably even up to 2, but we'll probably look at these other expansions. And that, at the moment, that's even running at only 6%. or less of the process plant, which is why we're taking the opportunity with toll washing next year. And then it can be further expanded at very little capital to at least more than 5 million. Just a very brief discussion. This is, and I won't get too technical, but this boxed in area is what we would do is the main tunnels with big pillars. The roads are about the tunnels are about 5.4 metres wide. The pillars are about 40 metres by 25. So we go and cut all that, bolt, put in the pipe work, do everything and really safe, very high factors of safety. Then we move that machine out and then we bring in this sumping machine. So if you look in the red, we then mine punches into the pillars and then we take the floor. But all that machine is doing is cutting, and it's nearly double or triple, 2.5 times the rate of one of the other machines. So we've got the full 4 units with a matched development and production, with trying to keep that inventory in place for the high productivity machine. So that all kicked in about just over 2 weeks ago, and we've got now the additional electrical trucks to keep up to the system. So we're running 4 panels. So that's sort of just a very brief description of sumping. It's a bit technical, but it's the high productive production phase of the. And then there's the future projects just to the north. And we've got an even further and an even better high quality project in a new basin up past Cairns. So that's longer term. And just some general statistics about coking coal. Just your average car, which weighs a bit more than 1.2 tonnes, probably takes about 8.8 tonnes of coking coal to make that car the steel. So it's a basic commodity, and there can't be any other way to make steel in a blast furnace. You use coking coal and iron ore to make steel. And Australia has 54% of the export market. And just that bottom left-hand corner is the actual, we're talking about 30 million tonnes of growth just in India, Vietnam, Southeast Asia. We're not even assuming China is a big market, a growth market, but China, with its environmental push, actually has to get more of the very high quality Australian coal to actually help its environmental position. So it will even still need coal to blend with the lower quality Chinese coals now. And again, just a number of key points there, but a very interesting small company, quite undervalued in this current market. We get through the next 4 to 5, 6 weeks, get into a strong cash flow position, and we've got some really great opportunities in the future. So thank you.